Hello guys, this is Randall with BitRaged. This is the weekly Forex market breakdown. I want to look at a couple pairs, and obviously we'll look at the dollar here. It does look like things are starting to shape up for some bigger moves. We are starting to see some movement and some potential positions. I know a few of you took euro dollar, and some of you took a little profit, some of you took a break even, but that's not a big deal because we know that in the long run these are going to play out. So I do want to adjust some things on the chart. Obviously, we've had a long-term channel that we've been looking at. Things have adapted a little bit, so I do want to adjust that just a little bit. So if we look at this, this is the channel that I had, and it's something that we want to keep in mind looking forward, but we did break out of it, and we are seeing that retrace. Because of that, what we want to do is we want to look at the most recent price action, and something like this is going to be more accurate. So we could do something like that. It could be more of a broadening wedge, and we could also look at it like this. That's only 2 touches. So for now, I'm going to keep it more like that, and I'm going to delete this so it's a little bit more clear. That does have 3 touches. This has 3 touches, and we're going to delete that. Let me just adjust this to the wick. All right. So that gives us a little better picture, more honed in. So we're looking at the most recent price action. It's going to help us more. So this is more of a broadening wedge. Obviously, we understand there is always the potential to come back up. But if we look at where we're at, it is impulse, correction, and impulse. The important part is we are at a double bottom area, and we are getting a very, very large daily rejection candle. So it is possible that we move back up on the daily, reject from there, or we could reject at a triple top. It's also possible we move back up, but obviously we'll have time to see that. So if we drop down to the hourly here, it is a little bit messy, so we do want to clean this up a little bit, but I did want to show you a couple things. So double bottom, we low tested, rejected. So if you're looking at this as a flag, you have to keep that in mind. A very low test on a double bottom rejection and a doji, it gives a lot more credence to a rejection and a move off than a flag to move lower. Doesn't mean that can't ever work out. Sometimes it does, but you do want to keep that in mind. I do have this as a possible area if we do move up further, and also we know that there is this area. So those are areas that we do want to look at for rejection. I'll remove that for now. And the important part was this was the impulse. This is the correction. It broke down, but it's breaking down fairly corrective as well. There are impulsive movements, but there's just as much impulse to the upside as the downside. So it's not really making that much progress. Most of it is corrective. So we can remove this just to keep things a little bit cleaner. Just focus on the most recent price action, which is that. So very steep, we are seeing that. If we do move up here and we reject, then we would look to see more downside on this pair. So on the euro dollar, the daily, we do have a very high test wick. It pierces the double top, or triple top really, and then it rejects. We do have arcing nature on the daily, and we also have a W pattern, which did get fulfilled, which is very interesting as well. So the momentum does appear for the euro dollar to be a downside movement. Again, it could be a triple bottom and a move off. Overwhelmingly, the larger long term is a move to the upside for euro dollar. So we know that this is going to most likely happen, but it doesn't have to happen when we expect it to happen. So we could move back down, double bottom here. I think that that is highly likely, considering where we're at. But at least to here seems very likely. To drop out of here and continue down really doesn't make sense, but it is possible if the U.S. economy continues to strengthen in the next 4 years. Then it is very possible that we do get more movement down on the euro dollar than we expect originally. But ultimately, I do believe that the move for euro dollar is to the upside. And again, it really doesn't matter because we're going to be trading on the hourly. Okay, so for the hourly here, again, I know a number of you took either the doji here, the retrace candle. Some of you even took a limit order on a third touch. If you did that, that is great. Very good entry. And as I mentioned in Slack, this is the type of trade that you want to take over and over. It doesn't always work out, and it may not always work out, but this is the type of trade you want to take. Now, I know some of you took this for a rejection, and some of you got a break even, some of you might have taken 1% loss. If you took this, you should have taken this. And that's the issue I see with a lot of traders, is they'll see this, they'll take that, and they'll look at that, that's a really good entry, and then they don't take the one that goes. So if you take this, you want to take that. And that's the important part. But this is an extremely highly probable trade. It's a very good trade. And what's nice is we do look like we are appearing to form a nice flag. The only issue is as market opens, spreads is going to keep us from entering this. So if we move like this for a couple hours and we still get the opportunity for an entry, I will be either entering on a retrace, depending on how it forms, or I will be entering on a break. But I am looking to take this before I sell. The only thing that will change this is if we, on market open, suddenly see a spike up. I will see if we get a flag this way, and I will probably stay out of it. So all the dollar pairs have been lining up, and obviously a lot of you have been looking at that. We do have 1, 2, 3, 4, 5, fifth touch here. We did break it. Now we're retesting it. It'd be interesting to see how this reacts over the week. If we move along like this, then this is most likely going to move to the upside. The fact that it broke and we are kind of teetering on the edge of this line indicates that the upside is still most likely. There is a couple things to keep in mind with that. We do have this pattern here. We didn't quite make it to the top. Maybe we will, maybe we won't. It is possible that we do something like this and then we move down. The only reason why I say that is because we're not getting a lot of momentum, and every time we try to break highs, like we broke the high here, we immediately retrace. So we're not getting the momentum to the upside. If the DXY suddenly moves rapidly, we're going to see that on this pair as well. The other thing you want to keep in mind is, even though this appears to be respecting, if we were to get rid of that line, we could also do this, and we do have 3 touches there. So we could even see that as respecting that. If that is the case, it looks more like a rejection to move lower, and then that would be impulse correction, would be a drop off. So that's a couple things to keep in mind as we're going into the week ahead. All right, so on the hourly, we are seeing a pretty decent rejection, getting a little bit of momentum to the upside, but it does appear overall to be a flag. So this is something you could look to take. There's a couple things you want to keep in mind. We do have a high test, we do have a low test. It does indicate a little bit of indecision is possible. But if this does develop out, it would be a nice flag. Again, with market open, things are going to be a little bit heavy with spreads, and you're not going to be able to take it. So I would wait 3 or 4 hours before taking anything on Sunday night, and it tends to be most trades on Sunday evening do not work out very well, and Monday tends to be a slower day as well. So don't get too crazy, and if there's really no setups, then don't jump in and try to take anything. So that's Aussie dollar. We are looking like we're seeing at least a temporary sell here. Let's see if we can get in on that. Obviously, we do want to keep in mind that it is somewhat of a double bottom area. Just something to keep in mind as well. So British pound dollar is interesting because an ascending channel, very impulsive move, and then a sudden turnaround, rejection. But we're not seeing overwhelmingly convincing impulse, right? It is decent impulse. We are seeing somewhat of a flag style, very wicky. Overall, a lot of correction, low test, extremely wicky on the end, more of a pennant style. And there's a decent chance that it could drop out. It's not something I'm going to take for a couple of reasons. As I mentioned, all the wickiness and also Brexit. nonsense. So I would not take this. If it fits your pattern, your style, that's fine. It is something you could take. But I will be paying attention to this. If we do break this channel, then I'll be looking to take it. Okay, so Kiwi dollar. Kiwi dollar is another one where we just break that trend line. We get the high test, and then it drops out. And you'll notice that, although I know some people would see this as a flag, it's got an ascending nature to it, which does indicate a dropout is possible. And if you look at this overwhelmingly, that's an ascending pattern to sell. And I'm actually backtesting right now another entry style based on this style of reversal. It's something that doesn't happen very often, but when it does happen, it's going to get you into the trade quicker and maximize profits. It's a really interesting style. So when it works, and when it happens, it works really well. So I'm just going to move this back like this, keep it out of the pattern. And if we look at the pattern, the impulse is not overly convincing to me. I'm not going to be interested in taking a flag here, most likely just because it's in the middle of nowhere. And overall, this style of pattern indicates more volatility and indecision to me than anything else. So what I'd want to see is another drop, an impulse, and then a flag, and then I would be happy to take that. On the break would be perfect. So dollar CAD, it's a pair that I'm very careful on. I don't trade too terribly often, even though I took 2 trades on it recently here. And the reason is it can be very volatile. So you might have the move correct, and it'll just whip on you and take your entry out and then go in the direction you expected. So you have to be careful. You want to be careful around news and also big moves on oil, or expected big moves on oil. They do correlate. But I did get a pretty nice trade here on this flag. I didn't get the reversal because that looked more like a flag than a reversal, and there was not any reason to take that as a reversal, in my opinion. So I did get the flag here. 3.72 was a nice trade. And then I took a loss on this one. And yeah, that was probably in hindsight not the best entry because of USDCAD and the way it works. And again, if you look at this, this was descending nature. I did have a reason for taking it, and actually that was a limit order I had set. And by the time it took me out, you know, it is what it is. But you do want to be careful in this style of entry because we barely broke this low, and we're forming another flag. It's generally something you want to be careful of. Dollar Swiss is another pair. I actually really like Dollar Swiss. The more I trade it, the more I like it. And the reason why is just because it's becoming more and more reliable. It used to be a pair that wasn't so reliable, but it's becoming a lot more reliable. And oftentimes when some of the other dollar pairs are so tied to the DXY that they're not willing to move, sometimes you can catch the moves on Dollar Swiss and Dollar Yen that bank really nice. For instance, this move down and this move down. Very beautiful moves, really nice percentage, all from a very clear ascending pattern. So it's becoming very, very reliable. It's a pair that I highly encourage you to backtest because it does move a little bit to its own, you know, the beat of its own drum. This was a trade I took, and I did get tagged out. Well, I actually took profit at the triple bottom area here. And the reason was because of what I was seeing as a pattern, a third touch, definite rejection multiple times. As soon as we broke this twice, we broke this low and we immediately reject. So I took that as a profit, got 2.39%. I'm totally happy with that, especially seeing how it went. But even if it moved up like this and then dropped, I would be happy because it fits my plan. Very happy with that trade. But what we're looking at here is basically this is indecision, very corrective. We don't want to take anything in here. So we want to wait either for a dropout and a flag, or a move up and a flag. And if we get that on the trend line, I'd be interested in taking that. But right now, dollar Swiss is not giving us anything. Not interested in it right now. If you look at dollar yen, it's extremely corrective on the daily. So we're not making that big progress to the upside. We're just moving very slowly and correctively upside. If you look at this, it's impulse, correction, impulse, larger correction, impulse. So you can see where the move is. With this, extremely corrective. So we know this is going to drop out most likely. We look at this on the hourly. So on the hourly for dollar yen, we very impulsive movement up. But once we get to this top, you can see we're breaking highs, retracing, breaking highs, retracing, and then it gets very ascending at the top. I took this trade a little bit early. It was obviously it was too early. I did take a loss on that, but it was because of this double top here. And sometimes on dollar yen, you don't break the high, and you'll see this right here. We didn't quite break the high from here. It was a pretty clear double top. We didn't quite break the high. So sometimes you can't always wait for that, but you also want to be careful not to just take too many losses. So took a loss, but then I got back in, and let's see here. It went down to 3. We're about 1.67. Just gonna let it run because the potential is more downside. But I'm happy with that right now. And if it does move back up, it tags me out, then we'll just wait for another entry. But right now it's kind of sloppy. If we're looking for an entry here, obviously with the market open, we want to give a little time. But if we get something like that, it's going to be a steeper correction. But that's something that you could take on the break. So an impulsive break of that you'd want to get into. You want to be careful with retraces here because it could move up very correctively with multiple retraces and still move to the upside. It's still possible. So I just want to mention with Euro Yen, it's another one. It's following Euro Dollar really with the rejection, but we got the high test, the rejection, a very strong rejection. We got that ascending, and then it breaks out. And right now we're forming a very tight flag. Again, if spreads weren't here, I'd be looking to get into this, but I'm going to wait a few hours, and if it's still meets my criteria, I will be entering Euro Yen. But I do want to be very careful. If we suddenly get wiki nature, then I'm done. I'm not even interested. I'm going to let the pair move. We do have a very high test wick here, and we do have a smaller low test wick here. It's not putting me off, but it is making me cautious. So as market opens, I'm going to pay attention and decide from there. But otherwise, this is a nice flag, and I will be looking to get in on it if the spreads calm down before it moves. So just to give you a little sneak peek, this is Euro British Pound. And this trade here I entered was one of the new entries that I'm testing. And as you can see, it moved in the direction I expected it to move, but I did get tagged out. It was like I had a 15, just over 15 pip. Had I added 20, it would have kept me in. But right now I'm just testing it to see. The way I work is if a 15 pip stop is going to keep me in 90% of the trades, then I'm probably going to keep it, even though I'll take a loss on some, because in the end the profit's going to be higher for the trades I stay in. And so that's kind of how I'm working it right now. But I'm still testing to see. I might have to adjust and do 20 pips, especially when we're seeing more impulsive moves, which this was very impulsive down, fairly impulsive down. But it did move in the direction, so I'm happy about that. And it is something that I'm excited to, really hash out and set my criteria for. So I basically have 3 things that I'm testing right now, 3 entry styles. The rage entry, I'm still honing a few pairs. I'm not done with a few pairs yet, but I'm pretty excited about that. So with Euro Dollar, again, very corrective pair overall. We are seeing that rejection again. Interestingly, it's rejecting on the other end. It's pretty much a reverse of like Euro Yen. Euro Yen is a move up and a rejection. Euro British Pound is a move down and rejection. Now, it's possible, I think it's extremely possible, we move up like this and then we drop. We might form more of a wedge style pattern. It's also possible that we move up and double top, although I think that is less likely. I do think we'll reject sooner. I'm not probably interested in taking a trade on this right now. I don't like the way it's looking. So I'd want to see a nice movement and then a flag, or another impulsive movement down and then a flag. But I do think that if we're going to reject, it'll probably be in this area here. But it's something to keep in mind, this pair. If we start to get nice movement on the DXY, the euro dollar, we may see Euro British Pound move as well. When Euro British Pound is moving in our favor, when it's working, it works nicely. When it doesn't, it's crap. It's a pair that's just extremely corrective, and you just want to stay out of it most of the time. So for most of the time, you want to stay off from Euro Pound. It's similar with Aussie Kiwi. Sometimes you can catch some nice trades. Aussie Kiwi is worse, but when Aussie Kiwi is corrective, you want to leave it alone. It's a junk pair when it's corrective. All right, so I want to add CAD Yen in here because it is a pair that I was actually back testing. Let me. There, I fixed the trend line. So it's a pair that I have been back testing and taking some trades on. This is another one for the new entry style I'm taking. I did get tagged out for 2.75, and it did end up moving up. And if you go and you look and you're like, yeah, you know, that was a 9% trade, and I only took 2.75, you can start to emotionally break yourself down and be like, that was dumb. I shouldn't have done that. But this is my management style right now. It fit my management style, and even though it tags me out and it moves up, the factors against me staying in the trade were stronger than staying in the trade. So I followed my trading plan, and if you look at this overwhelmingly, you have an ascending pattern, an ascending within an ascending pattern, very corrective all the way around, and then we're starting to get impulsive movement down. I kept my stop loss just below this area. Sometimes it just turns out it's just a double bottom. It turns out it's just a flag, and it still goes. I'm happy with that. Even though this was a almost 9% trade, I probably would have taken 8 if I'd stayed in. I followed my plan, and that's what matters, because 9 times out of 10, this is going to work in my favor. And the times when it doesn't, listen, I still took profit, so I'm still happy with that trade. So to beat myself up and go, you know, I should have stayed in, that does a disservice to me, and it does not benefit me. It does not help me be a better trader. So what I can do is I can go over this trade and I can look and say, was there a reason to stay in? And after I've done that, I can honestly say, no, my criteria were correct. I should stay out of this trade. And if I took this trade again tomorrow, I would take the same entry, I would take the same management, and I would get kicked out at the same place, because that's how I manage. And for me, this works really well. So I'm willing to sacrifice an 8% trade for 2.75 because I know that in the long run, I'm going to take a lot less losses, less break-evens, and a lot more profitable trades. So it's going to work in my favor. It just works out more often than it doesn't. Just a little bit of tip there on the psychology, because I know this can really eat you up when you see the profit you think you've lost. And I want to make it clear, this is not profit lost. You didn't lose anything. You didn't lose 6%. You didn't lose, 5% or whatever. You took 2.75% from the profit from the market. It's a profitable trade. It's a success. It's not a loss. This wasn't anything you could have because it didn't fit your criteria, my criteria specifically. So that's what I'm looking at with CAD Yen. It's an interesting pair. I would not highly encourage you to jump in and start trading it. It can it can really catch you if you're not paying attention. I am back testing it, trying a few different things. I'm actually going to start back testing another method with it because I've noticed a specific reversal style on CAD yen that I've noticed works extremely well. So it's something I'm looking into, I'm back testing, and if it turns out to be profitable on this pair or other pairs, I will eventually release that to the group. So that's just something to keep in mind. But that's why I tell you guys you need to back test each pair, because they all work a little bit differently. And some pairs you're going to find specific reversal styles and specific entries works really well. You'll notice specific management works really well, and you're just going to notice things that are going to make you a better trader. So you want to keep that in mind. That'll about do it for the video. If you enjoyed the video, please subscribe and comment below if you have questions or thoughts or what you're looking at in the market. If you're not a member of the course, I encourage you to sign up. The link is in the description, and join the Slack group and the course that we teach for trading Forex. Again, if you have any questions, please let me know. Thanks so much for watching, guys, and have a great week.